Okay, so good afternoon, everyone. So welcome to Beyond Connections, our bi-monthly event wherein where we discuss the happenings in the market and we also address the questions from our clients. So although we said not bi-monthly, no, we didn't hold for the past we didn't hold the event for the past 3 weeks because of the holiday season and also because of the earning season. But now the earning season is about to end for Q3, and we're now back to answer all your questions that you may have for us.
First, let's introduce ourselves. I'm
Okay.
Elizabeth, best one of the analysts here in Apple. I cover banking, economy, and
So I am Herman de la Paz, I cover property, both in and construction.
I'm Isaiah Perez. I do the technical analysis.
I'm Radiant and I cover human sector. And we are very excited for your question. So I guess before we go on for the updates, the corporate or economic.
moving up to our next episode, but catch up the fact that the sectors in Africa 15 years ago now their voluntary study and 25 years after their up or even upside rate hike 25 days for 2 years ago. This can be quite expected since it will be short over surprise the downside and it go down to 4.9%. Um, so that will be a bit positive for future loan growth, hopefully, if agencies remain at same level, making the loan growth for the user growth in the um, not slow down as much as it has in the past few months. The latest number, I think, for September, loans slow down to I think 1% compared to 7% in August. It's still really the high rate of lower demand for loans experienced in the past few years. The latest one, there were a lot of announcements, cases, and agencies which subsequently covered a new page in wait for your questions in the comments. Is there anyone anything in particular you want to discuss?
Okay, so I think you can already go to the comments. One is from Miss Annie. Okay. Miss Annie, good afternoon. Can you give your insights on the SMC preferred for company? Is it a good investment for long term or risk? Thank you. And getting good company. How do you
I'm actually not too sure about it, but I think there are different types of it, and maybe one of them is very floating opportunity or basically for the one really offer opportunity different so that's according to the fixed rate preferred here. So if it's a fixed rate preferred for that fixed rate, more it the expected interest rate will start to go down next year. So the mic carried our voices. And
So just to summarize what that said, so we prefer often to have fixed rates in order to be considered the expected return in investors. Okay. Not perfect. Perfect. Okay. If we're having some technical difficulty. to address this first forward.
Okay, hopefully you can hear us better now. We have the microphone closer to us. So, to recap, or just to repeat what we earlier said, we would prefer, um, if you want to invest in preferred shares, it would be better to do so in the ones that have a fixed rate, so that you will be protected from the possible interest rate risk, since we expect interest rates to start to come down next year, depending on where or how quickly inflation eases in the next few months. Okay.
Okay, I think our we better now. Thanks for the response there. And to add to the question, specifically, I think the answer is effect of the return along the negotiation. I think really depending on your risk appetite as well. And given the nature of assumptions risk or different in general, a more or less risky option especially to compare with the common shares. And for SMC futures in particular, we're not, I think there will be some going around regarding most of the time. But currently, we don't really see any risk so far for SMC. So, and another thing to look at when it comes to the rates is its difference or it's comparable to the rates and the 10-year bond.
But bear with us as we try to fix our mic problem.
So we can detect whether it's doing the properly. We are doing
Inaudible.
Check.
Okay, we're back. Are we back? Can you hear us?
Okay, sorry about that.
Put the comments there to you can identify the you have objective. Yeah.
Yeah,
Okay,
okay.
thank you,
Thank you so
Pete.
much, Pia, for the feedback.
So
Clearly and loudly.
maybe
Okay,
you can
so-
repeat what you
yeah.
said about SMC and preferred.
And from- Anyway. Okay, for
Go ahead.
SLC, as you mentioned earlier, just to summarize again what we mentioned on SMC. Basically, whether it's a bit of investment or not, first, whether we are looking at the fixed rate of the futures, and second, depends on the risk appetite. Depends on the risk appetite, the one trying to make the decision, and the nature basically for people they are less risky. If you compare it with common share, and given the financial condition of S&P, we aren't really seeing any issues when it comes to that. So, and last but not the least is if you compare it with basically the 10-year government bond rate and the difference between the two, that provides us some, I guess, some idea whether or not there will be investment that will be more beneficial if we compare it with other investments. So I hope that helps.
I think the latest ones, the latest branches we're offering are floating rate. So if you want to, if you want to invest in preferred rates, it will be more advisable to add the ones that are offering fixed rate. Preferred shares. If you look to invest in the ones that are offering fixed rate.
If you're looking for prefers, maybe you can consider also S&B. S&B has a fixed rate, and I think it's offering at around 8%. So
And
that
then if
is S&B. S&B.
yeah,
S&B.
do you know the rate?
I think it's at 8% at par value. So that can be part of the consideration.
Well, 8% is much higher than for 10-year. Good fixed income. Kind of.
Okay, so while we're waiting for more questions from our audience, from your covered sectors, is there anything that's striking to you? Maybe that's already explained for coverage right here. Maybe for you, Amy, anything?
For the consumer so far, we have been seeing more or less the same for the consumers as we saw in Q2. So more of the staples have been lagging compared to what we expected so far, supposedly for Q3. But the ones outperforming or within expectations have been the restaurants. It's kind of surprising actually since Q3 is seasonally weak, but SSSG across the board for the restaurants have been performing well, and this may be attributable to the returning foot traffic, dine-in sales, and pretty much, I guess the price points have not changed so much when it comes to the restaurants. Especially if we compare it with everything else, basically moving upwards in terms of price. So that's another part that we are trying to analyze further, whether we see some movements. And for Q3, for Q4, things are looking brighter, especially for a lot of the restaurants. And I guess another company that has been outperforming is Monde. Although it has been expected that Monde will perform much better than Q2 2023 and 3Q 2022, but it has performed much better compared to what we expected. despite the lower base. So I guess it's also um, could be the staples nature of its APAC PFP, particularly on Google. Luckily performed really well in the third quarter and it's looking to trend upwards further in Q4. So I guess those are the stuff. So our picks in the restaurant sector, I guess we can touch on that later. But if you want to know, if you want to know more about our picks for the restaurant sector, I guess you can join MyTrade, sign up to MyTrade so you can read more.
That's just, I'm curious now, you're just on the mentioned anything about rice prices, price inflation being higher in the past few months affecting the retail field. Maybe there's some substitution going on.
Yeah, that's an interesting thought as well. They haven't really mentioned anything, but I guess it really correlates as well with the rainy season since of cooler weather, people tend to prefer to eat noodles as well. And it's not only luckily that has been seeing it, but also its competitors in URC. It's also seeing some improvements in terms of noodles, not only in terms of price but also volume. So I think it's both, but more on I guess a lot of it coming from higher consumption from noodles.
Okay, thank you for that, Daniel. Siguro, before we move on to the next question, maybe you can take a quick look at on this part. Okay.
I think it's all on business today. If you can show it.
No.
Still below the 200-day average, which is the red line gold. For a clear technical reversal, we probably want to see this above pesos. Gold will want to see the break of this downtrend line. That's right. That's right. Here. So hopefully have stop the price appreciation. So the reverse and sober. So more sideways neutral from a technical perspective. This point.
Okay. Right. Thank you for that. I see. Okay.
There's a follow-up question from Andrew.
Okay. Follow-up po. If you buy the preferred shares at offering period but decide to sell anytime after the listing, is that possible? Yes, it is possible.
Next, from Jimmy Chua.
Okay.
If you only need more than 50 billion to the quarter, how come the price fell below 130 to the high? What was the wide and the bad news? So, not necessarily bad news, but we are seeing video net interest margin peaking or having peaked for third quarter. Although it is higher compared to last year, which resulted in double-digit net income growth, net interest income growth for GDO. Compared to the third quarter, net interest margins have remained steady at most. We are also expecting this to continue to no longer see any significant increase in going forward. This started with when the PSP started to fall. The rate hike, the last rate hike that was implemented a couple of weeks ago may still result in a higher NIM. However, it won't be that much it won't be as significant as we had seen in previous quarters. So we will start to see the effect of the higher interest rate environment on loan demand. We're already seeing some slowdown for the total industry and for BPO as well compared to previous quarters. So that's probably one of the reasons why the stock price has not outperformed in the past few weeks. But overall, BPO is still quite profitable, and there may be some boost if BPO decides to um, reduce its positioning levels since its NPLs or non-performing loans are quite low compared to the industry average. So actually, we recently changed our recommendation to BPO. If you are a client, you can look, you can refer to our report that was published last October 26. To see more about our outcome for this time.
Okay. Thank you for that, Bess. So for our next question, or from technicals. Okay. So before we move on to the next question, maybe we can look at videos.
So BDO is trading back below on the daily average of the technical loss, which is bringing out crossing below the red line. Since some further weakness, the long-term trend is indicating that down. It remains that way until it's been possibly picked up above $12.9. Still not much to do correctly.
Okay. Maybe for those who are not familiar with the debt cost.
Basically, that was it's just the 50-day cost below the 100-day average shows that long-term trend is down. If you could see back in 2022, it went down for a while, but then eventually recovered. And then with its global cost, it showed that the trend had turned up. So that may very well happen.
Okay. Thank you for that. I see. So for our next question from Reagan Robaton. Okay. So hi, MyTrade team. Is it good to accumulate SED now?
Thank you, Devan, for your custom. Cebu Pacific actually, in terms of our view for Cebu Pacific, we do believe that it is a good time to start accumulating SED, especially trading even near to its pandemic lows at about 29 to 30. Now it's trading, I think, 32. And given the recent earnings performance of Cebu Pacific, it is trending upwards, continues to trend near to pre-pandemic levels and capacity in terms of its operations. It's now at 98% of pre-pandemic levels. So basically, the flights that we're seeing, both for domestic and international, they're already flying passengers, or the flights are starting to normalize close to pre-pandemic levels, and by next year, it will start to exceed, which indicates a lot of earnings improvements. Although there are still headwinds, not only in elevated fuel prices, but of course that will help subs profitability, even in terms of forex, which again will help with profitability. But they are encountering issues when it comes to supply chain that may leave some of their aircraft on ground, or basically they won't be able to fly for at least 6 months, or practically around at that period, 6 to I guess a year, 6 to 12 months, or some for only 3 months, depending on the Pratt and White engine issues. So, well, if if it's in terms of percentage, I think should be around 10 to 15%, depending on how much will be affected in terms of the engine issues. Although the solution for Cebu Pacific is they are adding more to their fleet for next year to cater to the issues. But we aren't really seeing any issues when it comes to their earnings to the downside. More of them being able to increase their projected growth, which is, I think they guided 5 to 8% seat growth for 2024, which isn't really bad. But it could have been higher. It would have been higher if not for the issues that they are facing in terms of the engines affecting their current fleet. So what you can say for Cebu Pacific, it is a good time to accumulate, and maybe for those wanting for I guess some high yields, but a bit uncertain when it will be paid out. Uh, we continue to like Cebu Pacific Preferreds, which uh, by now already has accumulated about high double digit dividend yield. So once they fix their retained their deficits, they will be able to pay out their loans for that preferreds, and it will be beneficial for those holders maybe at the earliest next year. So that's it for the seven. Hope that answers the question. I guess you can look at technical. That's to be specific.
Uh, much technical front for Cebu Pacific. We're trading below the 50-day moving average. We're still trading below the 100-day. Hopefully it is for the hopes. Hopefully there's a oversold condition, so we can be able to run towards the 200-day moving average. About 50%.
And to add what I mentioned about, and I think that the selling has been overdone, given that we're not seeing any declines in terms of growth heading into next year. And I guess one of the more troubling lang for investors might be Cebu Pacific might not be able to pay out dividends by next year. So I'm not sure if that's really driving the issue. Yeah, that's all. So I guess we can move on to the next question. Okay, so from Fernand's. Okay, so I have 40% of my portfolio in FMETF. Would it be better to sell it and buy stocks with attractive dividend yield? Actually, for these types of questions, I would rather know, like, I would like to know how much, what is the client holding for the rest of his portfolio, what is his appetite, and what is his investment horizon. So, in order for us to better answer the question. However, for me, my personal view, given that the PSEI is currently at cheap levels, cheap valuations, I think it would be better to hold this exposure. However, you may consider selling up in order to gain exposure in high dividend yield paying companies. But for me, it's still preferable to at least hold some of that exposure, not completely offload the entire holdings. So, but yeah, as I said earlier, we would be able to better address your question if we know more, more, uh, more characteristics in terms of what are you holding for the secure portfolio, risk appetite, and investment horizon.
Okay, so from Kahoy Generoso, any insights on the compliance of SPNEC to the MPO? I understand that their 6-month deadline falls on December 2, 2024. I would appreciate your thoughts. So for this, the company recently made a disclosure. Um, Actually, they did not answer the issue directly, and explicitly, but you can gain some insights on what they're discussing. So first, they scheduled a stockholders meeting on December 4th, which is 2 days ahead, which is 2 days after the deadline of December 2. So that means they're expecting that they will remain listed thereafter. And then second, they also said that um, they will make a separate disclosure on their plans on how to lift the suspension and the trading for their stock. And then I think what their management is doing is that they're setting up the stage for SPNX lifting of suspension, because if you see the company's recent disclosures, it's mostly positive. Wherein Meralco made a 15.7 billion uh, buy-in in SPNX, and also MDG was quoted in saying that they plan to close a 200 billion investment with SPNX. So I think this series of positive disclosures is setting up the stage for SPNX, a potential lifting of suspension. So for this, I think we just need to wait disclosures for the next 2 weeks.
And just a slight correction, would be the 6-month deadline will be on December 2, 2020. Not that.
Sana natin dito. Okay.
Next.
From Lou or Donna? Okay. Moving on, Tel, is there some positive news that the price will appreciate? Down by 40% at the moment. Yeah. So for Tel, we observed that the company is underperforming Globe and Converge in terms of mobile segment and home broadband net adds. So the company actually just performed in line with consensus estimates, and we also released a separate report from the company in our past grade report. So if you want to gain access to that, you can open an account in MyTrade. But for now, we don't see any catalyst that can possibly prop up the share price in the near term. For maybe we can look at some technicals for the trends.
So for you can see that it has been close to 100 moving average since 2022. It's trying to seems to be trying to bottom up here. At this level here, sorry. This level here, kind of trade sideways. So it's also approached the 100-day moving average. So it might need another down move, sideways down move to eventually trade apart. Reverse downtrend.
Okay. Thank you for that, IC. So for our next question, maybe from Edu. Okay. So what do you think about SGP downtrend? Is it the fundamentals? Yeah, for me, I think it's the fundamentals. So recently it was disclosed that ERC disallowed some items that the company included in the computation of their annual revenue requirement. So for those who are not familiar, so for SGP, they should compute for their annual revenue requirement, and this has building blocks. And then one of these is the OPEX line item. And then ERC disallowed some items that were included in OPEX. So because of this, this has negative implications of ERC's rate rebasing. So, and as a result, this also has this should negatively affect the payouts of the company moving forward. So we think that's the main reason behind the sustained downtrend in SVP. So for the chart 3, please.
Um, oh, okay. I've not seen this in a long time. Very, very strong. Surely there's a bounce here in the technicals. Looks oversold. This biggest time for ADX. That's already reached an exhausted level. So I would expect at least a minor bounce. Let's say with a minor bounce while still being in the so, I agree with what they're doing.
Okay, so okay. Okay, thank you for all the questions that you posted during the event, but unfortunately, that's all the time we have. So before we end the session, we have some final words. Yes.
Thank you for very good for this episode. Hope next time we can have a better responsibility and the questions, the ones that we have not been able to answer, you can open on our page now. We have the client and the Facebook page. We can also just the question.
And for those who and you mentioned those questions unanswered, but for those who have questions further, but given the time limitation, you can just again post on our Facebook page. Then you can post anonymous title. So
And I just wanted to say it will be a webinar from MyTrade for 7 years. For clients, so if your time was up for that, if you were aware of the questions, try to send me the checks. We might be thinking about doing a webinar on number 10.
That will be next week, Wednesday. Next week. Okay, and also we'll be returning to our monthly schedule since, as we said earlier, earning season has already ended. Okay, so that's all the time we have for today. So see you again in 2 weeks, and thank you for spending time and interacting with us.
ba't kaya? Ito naman